With Kevin Landis, whom I've known even longer than you. And Kevin, you're one of the leading tech investors here in Silicon Valley. You've owned Apple for a long time. What made you first buy Apple, and does that thesis still work?
You know, we first bought Apple when we realized we were late to the turnaround story because, like a lot of people, our thinking had gotten sort of grounded in the last chapter. Right. And really, it was the fact that Apple had really good products in huge markets and very small market share. And so they had a lot of runway in front of them. And this was 3 or 4 years ago. Even today, Apple has, what, 5% of the handset market? Amazing upside, amazing room for growth.
Well, let's talk about that change. I'm curious, what the story was about Apple. Because I think that change in narrative is really important. What was the old story in Apple, and what was the turnaround story?
So we were talking a few minutes ago about people have sort of a pattern recognition software that's always running in their head. Apple was the classic, Polaroid, Kodak, Xerox, digital equipment. They've had their day in the sun, and now it's this long, slow decline.
They had an invention once, and they never invented again.
This is the Roman Empire after the second sacking of Rome, and suddenly they bounced back, and they had this amazing second act. And then you think, well, it can't just be one guy. Well, yeah, it can. And yes, it was.
Yeah.
And so
now, and that really went from iPod to iPhone.
Right.
But I wonder if you look at the company now. Emily just mentioned in the toss of this that the iPhone is nearly half of revenues. Toss in the iPad, and we're going to talk about more about this later in the show. But that is most of the revenues for this company. This isn't a computer company anymore. How do you look at it?
I look at it this way. We went from what if we gave everyone a computer and put a computer on everybody's desktop to what happens when we start connecting them, to, well, now we've got a whole supercomputing network. What happens if you don't have to stay at your desk anymore?
Right.
So it's not so much the computer, although an iPhone now is more powerful than your desktop computer was 10 years ago. Now it's sort of, well, what is this thin client that you're carrying around everywhere in the world? What are you going to do with that?
Yeah, Mark Hurd said to me yesterday on Bloomberg West that the iPhone is more powerful than a Cray supercomputer in 1987, which is simply amazing.
I would say things like that, only it just makes me sound old. In my day, we only had ones and zeros.
Let's talk about supply chain. What else do you want to own in your portfolio to participate as a derivative play to Apple?
Right, so everyone looks for these derivative plays, and by the way, there's not a great history of suppliers to Apple getting rich, right? We were talking about Portal Player earlier, right?
Portal Player was the supplier of the chip to the iPod. It was a momentum stock, went like crazy, and Apple one day said, yeah, we don't need it anymore.
Right, well, and as long as there were hard drives in the iPod, so, some of the bigger companies that are locked into this, they're in pretty good shape, and not just because they sell to Apple, but they can sell to everybody else.
Now, so Broadcom is everyone's favorite derivative.
Broadcom everybody loves, Qualcomm everybody loves, Corning, for the glass, this Gorilla Glass. It's not just for your TV, but it's also for all these little devices you carry around.
Let's talk about Corning just a little bit. So we don't know if Corning is the maker of the glass, but it's my understanding that glass is actually the most expensive external component that Apple doesn't make themselves in the iPhone.
Who'd have thunk? It turns out there's a lot of technology to really good glass. And making it even thinner and tougher actually makes it more expensive. So they don't sell glass by the pound, apparently.
And so you own Corning to participate, whether or not they're an iPhone supplier, they're going to be in a competitor's phone or something like it.
Right, and they're going to be, basically it's the idea that they're going to be more and more really cool displays all around you in life, and that's the Corning play. But Apple's helping that a lot.
Qualcomm, another, when the day comes we can pry apart this phone, and we will do that on Bloomberg West at some point.
Right. Well, 3 decades ago, Intel got the mother of all design wins by getting their processor designed into the IBM PC. What could be better? Well, look, that's a design win as to a 300-unit market now, the PC. The cell phone market's 4 times that. So who would you rather be than Qualcomm? And at the high end, it's companies like Apple designing your chips in. But, they can go up and down the product line.
So as Intel was to the PC, Qualcomm is to the iPhone?
Qualcomm will try to be. And now, of course, people learn from history, so, the customer base isn't going to let them get such a death grip on it. But they'll participate pretty well.
Well, and I think that's an interesting point. There was a time when the greatest profits in the PC business wasn't for the PC makers.
Right.
And it wasn't for IBM, it wasn't for Dell, it wasn't for poor Hewlett-Packard right up the road here.
Right.
But it was for Intel and for Windows.
Yep.
Or for Microsoft.
Yep.
So do you think that Apple tries to find a way, do they dual supply things?
See, this is the Michael Porter analysis, right? Where you're competing not just with your direct competitors, but with substitutes and with your channel and with your suppliers, right? Apple's done a masterful job of really just wringing their suppliers almost dry and giving them just enough profit that they'll love the business, but really keeping the lion's share for themselves.
And interesting that they keep their margins way up here. Is that about the innovation, because they're so innovative, or seemingly so innovative, that no one else can compete, so they can keep cranking things out at a 32, 34% gross profit margin?
Right. Well, think of it this way. You know, if you're looking at gross margin, well, what can you sell it for, and what's your bill of materials cost? Well, you know, design is free. Design, you do it once, or the software that gets written in these buildings right here, that has a unit cost of 0 once you've written it. And that's what gives them that great value add and those great margins.
Also, they have to keep doing it. Let me ask you also about this. You know, there's concern among some people. You know, you see this, it's not an iPhone 5,
right.
It's a 4 Plus or
right.
4S to be
right.
exact.
Right.
Do you think that presents gross margin opportunity for the company? Because a lot of the phone isn't going to change, and over time the parts costs go down, so they're kind of leveraging that curve, just putting a couple new components in.
Well, you know, look, the mantra is better, faster, cheaper, smaller, right? You want to do the exact same thing that you did, a little faster, a little cheaper, a little more seamlessly, right? And then every once in a while they say, well, here's something new you might want to try to do. This is just that polishing of better, faster, cheaper, smaller. And yeah, it'll also be a better margin.
Real quick, you going to buy one?
Of course.
There you go. I might do the same. Kevin Landis, really glad to have you on and get your insights into the supply chain for Apple Computer. Emily?